Welcome back. Well, the market's taken another leg down and is almost at the morning low, 256 points down, 257 down, 17,070. I was making this point that perhaps the 200-day exponential moving average will be tested, which is somewhere around 17,000. The 200-day simple moving average, simple moving average is 17,000. The exponential moving average is at 16,800. On the bank Nifty, the level to watch was that 50-day exponential moving average of 38,750. And right now we're at 38,820, so very close to that. But this looks like some kind of a clean out trade because of expiry as well. That's also clearly putting a lot of pressure on the market. But let's move on then. As festive season picks up gear, we focus on Stovecraft's plans on marketing spends this year and to get a sense of how rural demand trends are panning out. Rajendra Gandhi, Managing Director at the company, is now joining us. Rajendra, hi, good morning. Thanks a lot for joining us. So if you could tell us, in terms of the demand, since the festive season is approaching us, how are the early trends looking?
I think it's not audible. There is no voice.
Can you hear me? Sonia, you want to try?
Okay, Mr. Gandhi, is my voice reaching you? Okay, I don't think he can hear us, but we'll try and re-establish that connection with Stovecraft. That's been a stock on our radar for a while. The market, by the way, just wanted to mention that it's now getting worse. As Anuj was also telling us a while back, I think it won't stop at this because there are so many headwinds now. There's the RBI policy as well. So also what I'm noticing, Anuj, is that it's a wave of profit taking, right? Across the board, autos, banks, all the guys that were rallying in the last month or two are now selling off.
Yeah, even the outperformers are selling off, right? Look at the market bet, Sonia. 1:12. I don't recall when was the last time I saw this kind of a market bet. So obviously that's under quite a bit of pressure. Power Grid was down 10% on Friday. One would have thought that there would be some attempt of recovery. That's down another 8%. Tata Chemicals is down 6.5%. Tata Motors is down 5.5%. RBL, AU. Now even the outperformers, some of the chemical stocks which were doing well, they are beginning to fall off. Deepak Nitrite, Navin Fluorine, Jubilant Foodworks, Ashok Leyland, Hindustan Aeronautics, which has seen a one-way rally. Looking quite bad. And this is the start of the week, expiry week as well.
I would still say just a catch up, right? I think we were talking about that earlier as well. Maybe a bit of a painful catch up on the way down and may last for a little bit. We'll see. When you look at day-on-day changes, always put that in context with what you've done relative to where everyone else is or the rest of the globe is at. And this has been a particularly tough year for the rest of the global market. This has been not a great year for Indian equities, but relatively, yes, it has been a great year so far. So that maybe is getting corrected a little bit at this point. So 17,050 now on the index. Sonia.
Also, we keep talking about India's outperformance, but when you look at individual portfolios, there's so much pain, right? I mean, large caps, just look at Reliance. It's down 10% this month already. TCS, Infosys, ONGC, and that's just the large caps. If you look at, you go further out, I mean, even from the headline index, names like, say, Tata Motors, Bajaj Auto have all lost 15-20% this month. Yeah. So the pain is quite evident in individual names.
Absolutely. It's visible. But again, the market did outperform. The big concern is that the same ETF money which led the market higher in the last couple of months, in August specifically, is that leaving us. Mitesh Thakkar is back with us for some fresh trades. Mitesh, hi, morning again. Been a very ugly sort of first hour. The market down about 250 on the Nifty and down about 700 on the bank Nifty. But do you think it makes sense to take a contra long here or not yet? And what about your individual stock calls?
Anuj, actually, I was looking for some kind of a pullback if we open gap down, and if not from 17,150, then I think around 16,990, 17,000 area. That's the 200 average level as well, and also a gap area. So I think around those levels, at least, what we'll do is take some money off the short positions, trail your stop loss to 8 tight levels, and then if you get an hourly bar reversal, then maybe attempt a long. But yeah, I think around 17,000, 16,090, 16,990 levels. I think definitely, time to take some money off the table on the short side and trail your stop losses to very close to the current market prices. Having said that, a lot of stocks are still giving breakdowns. So as of now, the bias remains on the negative side. State Bank of India gapped down and has continued on the negative side. So sell that with a stop at about levels of 550. Look for targets of around 522, 524 on the downside. And the other one is Hind Copper. Similar setup, a gap down and a negative breakdown on the hourly chart. So here I would suggest a stop at about 110 for targets of around 100 on the downside.
Mitesh, stay with us. Thanks for those trades. By the way, Anuj, you were talking about that ETF bit, right? And the EPFR data kind of bears that out. We put this out on the editors roundtable on Friday as well. The data, I put this out in the morning today as well. So this is the latest data, from EPFR, which tracks flows. Remember, bulk of the flows, not bulk, 94% of flows, in foreign flows into India comes through emerging market funds, split between active and ETFs. Active is the majority, ETF is the smaller. Active has been seeing outflows, but now ETFs are also seeing outflows. May was positive, June was positive, July was positive, August was small negative, and September so far, this is as of last Wednesday, is negative $2.6 billion or so. So this is not India ETF, this is EM ETF, and there is a little bit of a reversal, which is very much evident at this point in time. Yeah.
Okay, well, let's try and re-establish that connection with the management of Stovecraft, right? Rajendra Gandhi, who is the managing director at Stovecraft, joins us now. Mr. Gandhi, is my voice reaching you now?
Yeah, now it's on.
Okay, great. We just want to start by asking you how the demand trends are looking like. We're heading into the festive season. What are you expecting in terms of both growth as well as customer preferences?
First of all, good morning and happy Navratri to all. And discussing on growth, I can say we are amidst the festival season. For us, the festivities start from at the south, starts with Onam. We had a good Onam. And I think overall, all the markets are now working normally, unlike the last 2 years. So with all this, there is stability in all the channels. And I can say there is good consumer traction in the market.
Okay. Good consumer traction. Mr. Gandhi, good morning. So, in terms of inflation, is that hurting rural demand?
I can say while there is inflation in the economy, but there is a kind of stabilization in the cost of various materials that go into the consumer goods, particularly steel, aluminum metals. So on this front, there is not a kind of an inflation scenario. It is a stabilization scenario.
Okay.
Mr. Gandhi, pressure cookers is what percentage of your sales, sir?
Is closer to 25%.
Okay. The reason I ask is we had the management of TTK Prestige with us some time back, I think about 3 weeks back. They said that, the entry-level segment, which is about 60% of their pressure cooker sales, things are stagnant, the word used by them. And they did say, though, to be fair, that, as we get into the festive season, maybe things will pick up a little bit. What's happening to this segment for you at the entry level?
Because we are getting to a different TG. The consumers for us are the mass segment, more of the mass segment. But there is, of course, a upward trend in the type of products that the consumers are choosing, particularly the kind of metal. All these years, we would see only aluminum pressure cookers at the forefront of the pressure cooker industry. Stainless steel is catching up, which is relatively premium to the aluminum. We are seeing reasonable growth in our entry-level segment, but we are seeing high growth in the premium segment, that is the stainless steel kind of segment. Of course, there are various variants that we offer in the stainless steel also. So with all, but there is overall in the industry is experiencing high growth in the premium segment.
Okay, so high growth in the premium segment, that's something that the other players have told us about as well. Just coming back to that point you were making about the stabilization of raw material costs, right? In Q1, though, your raw material costs went up by 30%, but you didn't take a commensurate price hike. Your price hike, I think, was about 3-4%. Any more price hikes that you'll have to take, or will you make it up by the fall that we've seen now? Just trying to understand, when can you get back to double-digit margins, something that you had seen last year?
We have no reason for any price hike now. We don't see that is warranted, required. The prices are stabilizing at the current price, cost price. We can continue to offer our consumers the products at the price we are already selling. We have the reasonably aspired margins. We are already there. Of course, as as you see the trend in input costs coming down, but you still continue to hold inventory. It's not that you are exhausted all your inventory at the price. But we are seeing, we are getting, I can say, as we are guiding ourselves towards that margin, we are very close to that.
Okay, sorry, very close to what? You said no reason for price hikes, but margins 8.4% currently. So where will you end the year?
We would want to protect 11% margin, and I think we are very close to that.
Mr. Gandhi, how is the consumer electrical segment done so far in Q2?
We are growing.
By how much? I mean, what's the rate of change for you in this quarter compared to the previous quarters, and what's the expectation?
Yeah. For us, overall, it is a smaller business, so the base is smaller, and hence the growth rate is higher. It is the growth rate is much higher than the company's growth rate in this segment because the base is smaller. It's a relatively smaller and newer business for us.
In terms of e-com contribution to total sales, I mean, how is that channel doing now? I think it was about 35%.
Yeah, particularly last year there was a higher spurt because of the way consumers were shopping. We are seeing stabilization there also, and I think actually we had challenges in the first quarter, but it is stabilizing now, and the selling season for them has started. The various festivals that they celebrate, and we are seeing the initial feedback is very good.
Will you be sticking to pressure cookers, LEDs, induction cooktops, or do you have any plans to launch some new products as well?
We are in the kitchen and home, and so we continuously try to innovate into new products. We will continue to offer new products within the segment that we are. Of course, we are also in the lighting business. As you all know that we have acquired Kawa, which is an extension of our LED lighting business. It is in the electric lighting. And so the operations have started. The team is now getting into stabilizing there, and we have started making those products also. So the lighting will continue, but the larger segment or the main focus, the main business is for us the consumer, and for the consumer is the kitchen and home. And within this space, we continue to innovate and will definitely bring more and more new products to the consumer.
All right, Mr. Gandhi, we'll leave it there. Thank you very much. Good speaking with you, sir, and appreciate your sort of outlook that you provided for us as always. So yeah, I mean, in the kitchenware segment, entry level things maybe a little. He said they're growing reasonably well, but premium category across the board is doing very, very well. That's what we've heard from other companies we've spoken with, companies like TTK, etc. as well. Now, the rupee, of course, is the other big story. The markets here, the stock markets are coming off, but the rupee is also seen a spurt. I mean, there's a big gap for the dollar rupee. Lata is here to tell us the latest in terms of what she's picking up and what's going on. Lata, over to you.
Well, after the Fed's googly, the big point for the markets was the way pound behaved thanks to those unexpected tax cuts. And because of that, you saw the dollar reaching a fresh 20-year high of 114, the dollar index, and the bond yield in the US going to 3.73, the 2-year as well, both of them at some fresh 13, 14-year highs. So obviously money is going to the risk-free assets. The rupee, is impacted by what's happening in Asia. Asia is seeing this money fleeing to risk-free assets. So all Asian currencies are down between 3 and almost 1%. Very little is 1/3. Most of it is towards the 1% fall. And rupee in the NDF market, and even on Friday evening, was around 81.5, and that's where it's opened. Now, Reserve Bank did protect the 81 mark on Friday. It was supplying dollars all through Thursday, all through Friday. It is supplying dollars even now, but it's not apparently trying to target a level. So people are really waiting and watching. These big numbers is what dealers watch. There is no chart over here. 81.50 they are hoping, and then they are hoping that 82 will be supported. It could also get supported by exporters. Exporters normally sell in the last week of a month. So some flows might come because 82 is an attractive level. And you could also see the, watch for what the Reserve Bank is thinking. So at the moment, really wait and watch.
Okay, wait and watch, but it's a free fall, so to speak, for
there are not much equity guys selling, buying dollars just yet. That was one feedback, but this feedback, whether equity guys sold and are buying back dollars to take it home is normally known only by end of day. So right now, people are not attributing the fall to equities, FIIs exiting or anything.
Okay, all right. Thanks a lot, Lata, for that. Well, let's do one thing. Let's move on and talk about the defense space, because we've recently seen a rising thrust on defense indigenization from the government of India. Siddharth Mishra, who's the chairman and managing director at Bharat Dynamics, joins us now to tell us how this is impacting their own business and what are the prospects from here on. Siddharth, thanks a lot for joining us. You know, first I want to ask you about whether there are any plans or anything that you've heard on the on the divestment front, because the government shareholding is at 75% currently. Anything that we can expect on divestment?
No, as of now, I have not heard anything from the government of India, and I don't think there is any plan right now for increasing the disinvestment as of today. However, in future, I'll not be able to tell you. But as of now, there's nothing.
Right. As of now, but this is obviously, I mean, it's natural that it'll happen at some point, right? And it'll has to come through. Would you agree with that, sir?
Certainly, as per the government policies, it will depend. And BDL being a strategic sector, and we are into manufacturing of various weapon systems. So in near future, I don't see any thing coming out right now. But I'll not be able to tell exactly about the present government's plan.
Okay, so you know, your orders currently in the pipeline are about 20,000 crores, including the Akash IA order for 2 regiments. You have the Asram order as well. Can you give us some timelines on the completion of these orders? What can we expect in the next 1 to 2 years, and what would be the revenues that you can generate?
See, as of today, we have got order of almost 12,000 crores. And these orders is expected to be completed in next 4 to 5 years. Whereas in pipeline, we have got around 20,000 crores order, which I'm expecting by end of this year, or most probably beginning of next year, we will have a total order value of around 20,000 crores. This year, we are planning 3,200 to 3,500. And I'm sure that we will be able to achieve that. And next year onwards, there will be a drastic growth in our revenue from operation. And this is because our order books are going to increase. And we are expecting a few export orders also in near future. We have got a lot of leads, and we are in negotiations, and we are in talking with various foreign customers, and I'm expecting that by end of this year or next year we will get some good orders on export. And these export orders generally we have to complete it in short time, so we are preparing to complete that also. And so we are expecting that by next year we will have good export orders.
You know, the new listing, Harsha Engineering, which is up 35%, so that's heartening to see. I mean, the market may be down and out, but when you have a listing like this, opening up in the green strongly does tell you that, well, you know, it's not normal to see the market down so sharply, but you know, it's okay. I mean, there are things which are doing well, which were expected to do well, a listing like this one.
Also, you know, this company is a market leader in its space and precision bearings that it manufactures. It has, I think, 50 to 60% of market share. I think the street likes that, right? They prefer in a volatile market like this to stick with sort of the market leaders who have a more.
It's not complete disinterest. I mean, that's the point I was making. So there is interest, and things are getting bid up as well. Almost 40% now. So 453 as compared to 330. Which was the issue price. Mr. Mishra, sorry, just I'll get to the export order, and if you can, 2 things. One, the Akash orders, what's the timeline for completion of those orders, sir? Intake and completion. And second, can you quantify what is your expectation in terms of these export orders that you're expecting?
See, export order totally depends upon the requirement of the customer, that how many units they would like to take. So we are expecting at least one regiment to two regiment from various countries. And that means around 700 to 1,000 crore per unit we are expecting. So next year we will start getting the orders, and generally it takes 18 to 24 months to complete one order for Akash weapon system. And we are in dialogue with 4 or 5 countries. So let us see by next year we will get some firm orders on export.
Could you, I mean, 700,000 crores per unit, you said?
Yes, yes.
This is the entire system, weapon system?
Yes, yes.
Right. And what could this be? I mean, how many units are we talking about? Do you have any sense in terms of, you said you're talking to 3 or 4 countries, right?
See, at this moment, we will not be able to tell you exact requirement because, you know, it is little sensitive information.
Okay.
Okay. This 12,000 crore current order book that you have, which you said you're going to execute in the next 3 to 4 years, right? Can you tell us what is the margin profile of these new orders compared to the earlier? Are you sitting on higher margin orders? And what would that mean for your blended operational performance?
See, we are expecting better margins as we used to have for last 3-4 years. And we are expecting at least 20% and above margins for present order book. And it's a blended margin. It is not on a single system. In some systems, it is a little less. Some system, it is more. So the total overall efficiency and margins which I am expecting is almost 22 to 23%.
22 to 23% is what you said, right?
Yes.
Okay. And I just wanted to understand what is the current proportion of imports? What is the indigenous content by value currently? Has it changed compared to what it was, say, a year ago?
No, right now we do not have much difference from last year. Almost 10% to 15% imports we are having. And this we are working to reduce these imports. We are working too much onto indigenization, and indigenization has been given a lot of impetus by Government of India as well as from the company also. Now we are looking product wise that every product, whatever items we are importing, we are indigenizing in a phased manner, and especially the current product, we are expecting by 25-26 entire range of items will be indigenized. So for the current product, however, when in the ongoing projects, which is new products, it will take some time for indigenization of the complete thing.
Okay.
So we are expecting that right now our indigenization content is almost 80 to 90% overall, if you see. So we are working towards it, and we are planning that by 25-26, present thing will be complete.
Got it, sir. 10-15% import content, and working towards reducing that as well. Thank you very much for taking out the time, speaking to us here at CNBC-TV18. Thank you. Well, take a quick break here with news that I think we've got the market down 300 now. So this is, of course, a new low for the day at 17,027. It's more of the same in terms of the selling that we've been seeing from the word go today. Take a break. Manisha, of course, will put the focus on commodity market action. Stay tuned. That's coming up.
Okay, still down almost 300 points for the Nifty, so there's no respite for the bulls at all. But let's get a quick handle on what's happening in the world of commodities now. Manisha Gupta is here. Manisha, good morning. What are you looking at?
Well, Sonia, nothing much changes from Friday to Monday, and we have seen the sell-off continue, intensify actually for many of these commodities after the US Fed raised hike by 75%. That was 75 basis points. That was factored in, but what the markets are really preparing for now is further aggressive rate hikes for the rest of this year as well. So you have a complete sell-off that we've seen in metals. Gold is trading at a 27-month lows, and the crude oil prices, which fell 5% on Friday, hitting an 8-month lows, actually have seen some consolidation come in the morning today. We are looking at 890 go down for Brent. $80 is given away for the WTI crude prices as well. And on the charts, while we are oversold, but the momentum still looks on the weaker side there. So Friday was a 5% decline. On a week-on-week basis, we have seen 7% of a cut come in for the WTI crude prices, 8% down for the Brent as well. And that is pretty much the case across energy sector. On a week-on-week basis, we are down 7% for crude, 11% natural gas, 4% for gasoline, and on a month-on-month basis as well. And by the way, for last 4 weeks consecutively, we have seen the crude oil prices decline every single week, declining by 18% now in last 1 month, 26% down for natural gas as well, as US is looking at higher inventories, higher production, and lower demand from European Union continues to weigh on many of these energy commodities there. The markets are clearly reacting to the fears of rising interest rates and impacting demand. There are recession fears now increasing into the markets. We have the dollar index, which is trading at the highest in 2 decades, and the markets do believe that it perhaps wouldn't stop at 114 as well. You could be looking at higher numbers there. Many of the international currencies have hit multi-month lows to all-time lows as well, and we have seen weak contraction business activity data come in from the European Union and UK as well, telling us that the demand could continue to decline. This quarter actually is now turning into surplus when it comes to the global crude oil inventories there. What the markets though will watch out now for the OPEC meeting in the next week, where OPEC Plus may intervene into the markets by curbing supplies. They have done it twice already, and this could be coming in with a bigger quantum there. Also, a statement from Saudi Aramco warning of underinvestment because of the lower oil prices is something that could be supporting the prices. But most importantly, even as China had just about started to open and markets were looking at some demand coming in, we are looking at the Chinese National Day holidays from 1st to 7th of October. So this is a time that you could be looking at more choppiness continuing in case of the global commodity prices. The belief now is that we could be looking at some support coming in for 82 to 80 in case of Brent prices in this week.
All right, Manisha, thank you very much for that. So that's commodities very much in focus. The market is down 300, so we are pretty much almost at the day's low, 17,032. Well, it's time for a quick commercial break. On the other side, we will bring you our Citizens Monetary Policy Committee. My colleague